Good morning, good afternoon, everyone, depending on where you're joining us from. My name is Tolu Lope Babajide, and I'm the Gender Network Manager at FSD Africa. It is my absolute pleasure to welcome you today to the FSD Network Live event, which is aired in commemoration of the annual Financial Inclusion Week, powered by Center for Financial Inclusion. So this live event is themed Strengthening the Business Case of Lending to Women Businesses in Africa. And I have with me brilliant and amazing panelists whose work across Africa is centered on channeling capital to all sizes of women's businesses. They are going to be doing justice to today's topic. And they're going to be doing justice to this topic. They're going to be offering us deep insights into the how of financing women's businesses in Africa. What has worked, what hasn't worked, and proffering real-time solutions to us. Meet our panelists. Thank you very much. Before we go straight to the panel session, I will be setting some housekeeping rules just to ensure that the session runs smoothly. Everyone will be muted except for the panelist and the moderator. We want to meet you. Please use the chat box to drop your name and organization, and also use the chat box for questions. And these questions will be answered during the questions and answers. A bit about who we are, FSD Network. Okay, in setting today's context, the prevalence of female entrepreneurship has shown an upward trend in Africa, with 58% of SMEs in Africa owned by women. Nevertheless, women-owned businesses persistently experience slower growth rates compared to men-owned enterprises. One of the factors limiting women's SME growth is the lack of financial resources. While assessing finance poses a difficulty for all SMEs, it is particularly pronounced for women owners. And with this, we are going straight to the panel session. And I'm going to be starting with Esther. Hello, Esther.
Hi, Tolu.
Esther, you've worked extensively in Africa, focused on channeling capital to women's businesses across SMEs and MSMEs. What would you say is the most compelling business case of investing in women's businesses? And does it differ region to region? I have a follow-on question, but I will allow you to tackle that first. Thank you very much.
No worries. Thank you very much. And good afternoon, good morning to everyone. So to respond to your question, and I think it's actually very opportune, because even within the work that I'm currently doing at the MasterCard Foundation on gender, we ask ourselves the same question, the question about the business case. The most, if you will, compelling business case for women is, first and foremost, they represent 50% of the African population. And if we're wanting to develop the continent, developing it with only half of our population instead of the 100% will not happen. So in this particular case, we're losing out. The second thing is, Africa is the continent, as you said it yourself, where entrepreneurship and women, it almost kind of goes hand in hand. We are the continent with the highest percentage of women entrepreneurs globally, right? What that means is, I think if I remember the data correctly, 1 in every 4 women in Africa is actually an entrepreneur in one way or another, right? Now, you take that further and you brought up the point about, the access to finance need or the gap. This is where the opportunity actually is. And as we know, $42 billion worth of access to finance for women entrepreneurs. And on top of that, we're not even talking about the whole market, because that $42 billion gap is actually for formally owned enterprises by women. So if we actually took the informal sector, that opportunity technically would be even bigger, right? So talk about a business case. This is where there is money, as we would say, to be made. And Abiodun here as a banker would speak, I believe, to that. And then the last point that I will make on, the business case is what that market opportunity means for the growth of our economy. And it's been said over and over again. Our countries in Africa would increase their GDP significantly if they actually took the women's market into account, and if we actually reduced also that gender gap, right? So I think the numbers are there to prove what the opportunity actually stands to be, but we also have to be intentional. And I think very often that's where, the opportunity gets lost, is because we have the numbers, but the intentionality doesn't follow.
Thank you so much. And I have a follow-on question quickly. I'd asked, does it differ, the business case, does it differ region to region? Do we have a region that is more, that the business case is more compelling than other regions? And let me quickly add the other follow-up question. Is it always necessary to demonstrate a business case to financial service providers, financial institutions, before investment is made into women's businesses in Africa? Is it always the case?
So does it differ from region to region? I think you would say the numbers, right, from North Africa to East Africa, Southern Africa, West Africa are going to be different, right? But I think for me, that's not where the opportunity lies. The opportunity lies again in what financial institutions are willing to do to tap into the opportunity, however big or small, right? Because if, let's say in North Africa, we say 14% of women are entrepreneurs, sure, but that's still 14% that has the ability not only to yield more in terms of profitability and growth for the financial institutions that are involved in it, but it also has the opportunity to bring in more women entrepreneurs, because they will see other women entrepreneurs grow and grow successfully. You see, so whether the percentages are different by one region to another, I don't think is to me at least so important. Now, in terms of, do you need to demonstrate the business case at all times or frequently? I would say that data is not static, right? And so because data is not static, it's important to keep bringing the data to the forefront. So again, as part of the MasterCard Foundation, for example, we have committed to ensure that we are accelerating work opportunities for young women, not women. But in this particular case, as we're speaking about young women entrepreneurs, then it is important to be able to bring that data to bear, so that the partners that we're speaking to and wanting to work with are seeing where the opportunity also lies for them. And based on that, how do they utilize the data that we're providing to build on it in order to develop the right services, the right products, the right approach for the target audience that we're speaking to. So in a way, it's not so much that you have to keep proving that women and young women in this particular case are a viable market, but you have to be able to bring the data to the forefront in order for the right strategies to be designed, for the right products to be designed, and so on and so forth.
Thank you so much, Esther. I'm holding on to some phrases that you mentioned. There is money to be made. And that is what we constantly need to prove and present as tangible, through tangible data to the financial service providers. There's money to be made. And that takes me directly to Abiodun. Abiodun is the director. I'm calling you Abiodun, director. Group Head Women Banking at Access Bank Group. And Abiodun, you've had, Esther, there's money to be made.
Sure.
But also, there are myths around lending to women's businesses in Africa. One of which is that lending to women has to be concessionary. In your role as the Group Head, Women Banking at Access Bank Group, what is your experience creating a fine balance between financing women's businesses and making profits for the bank? I have a follow-up question, but I want you to answer that before I move on to my follow-up question. Over to you, Abiodun.
All right, thank you so much, Tolu. And I think actually the foundation for that question is well laid by Esther. So Esther, thank you for making my work easier. And so yes, we hear that a lot. And I know I have actually been at several sessions where you see a lot of resistance from financial organizations in embracing lending to women because they feel they're not exactly clear on the business case because their fundamental goal is profit. And so they feel that if I have to give these concessions to women, then am I missing the point of the profitability that I'm supposed to be pursuing as a financial institution? But I want to say that banking women is profitable. We have done it in Access Bank over the years, and we are very clear on it. So banking women is very, very profitable. First of all, I will say that, yes, so those things that makes it profitable. First of all, because really, women need concession. We really want to encourage them. We really want the women to come out of that poverty level that they are and actually embrace lending to support whatever they are doing. Yeah, so we give that incentive to say, yes, if we're lending to you as a woman, there'll be a discount. But yes, the terrain is tough. Funding is not also easy, but we have been able to do that successfully because we've had supports and partnerships from DFIs who actually have this strong vision as well. And with them coming on board, when they provide funding, it comes at a cheaper cost to us as a bank. And then it helps me to, be able to afford to give a concession to a woman that is borrowing from me. Currently, I think in Nigeria today, inflation already is about 21–22%. And NPR itself, the monetary policy rate is also about 18.75. So there is even no basis to begin to consider a concession for a woman. However, because we get this funding from the DFIs, it really helps us to be able to, get it at a cheaper cost and be able to pass on that savings that we get from the cost of fund to the women. And that actually has been very, very helpful, to the bank. The second point in terms of this profitability is also that, when the DFIs come on board, they are not only giving funds in most times, they also support with technical assistance. When the technical assistance is offered to you, it helps to take care of some of those costs that you would have incurred in training. training of the employees, you know, to even be able to understand how to sell, what to sell, product development, you know, and all of that, as well as even the women that are running the businesses, so that they understand how to best run their business. Like we had some for the women in agribusiness, good agricultural practices. The trainings, you know, were offered to us from the DFIs. And of course, that would have costed us money to train the women and to ensure that, yes, they have the right knowledge to handle their business and manage it very, very well. So the support and partnership of DFIs in this business cannot be overemphasized. It's actually very useful, and it's actually been very supportive of what we do, and has enabled us to be able to put you know, those concessions in place for women. I would also want to say that, you know, women have been proven. Data, statistics, survey experience has shown that women are better money managers, and they are better repayers of their loans. When we started the pilot of the women banking in 2006, the portfolio itself had a staggering 99% repayment, all women. So we had just less than 2%, in fact, very insignificant NPL. And as a financial institution, that's one thing that will determine how profitable you are. Your non-performing loan portfolio is very critical. So when I am assured that it's almost given, that every money that I'm lending out is going to come back to me, almost, I am sure that I am not going to have to make provisions in, you know, writing up bad loans that will come out of lending to this set of people. I'm not having to incur costs, getting recovery managers to pursue them to make good their obligations as at when due. You know, all of those costs is adding up and reducing the profitability at the end of the day. So it just makes sense that I lend to women. In fact, as a bank, we are looking at giving as much as 70–80% of our lending to women, because it puts our minds at rest and that they would pay back. We don't have to make provisions for non-performing loans, and we are still going to remain very profitable. At the same time, I would want to also say that, you know, one thing that, you know, banks shy away from is also the guarantee. Of course, when we now begin to talk of the collateral, the women do not have collaterals. How am I supposed to lend to them? What will I fall back on? Apart from helping them, you know, to look at different products that can allow us lend to these women with minimum flexible collateral structure, let me put it that way. At the same time, we also get support from DFIs, from some DFIs in form of portfolio guarantee. When you have your portfolio guaranteed up to 75% or more, I'm not sure that you have a lot of fears. So the worst case, which is, let's even say they've guaranteed the portfolio by 75%, the 25% that is still out there, you are almost as good as covered, because even when it is not guaranteed, you have a very low NPL. So, you know, all of this support and comfort gives you the assurance to go further and further into lending to women. And obviously, it's profitable. If it is not, trust me, Access Bank today is probably the largest bank in Nigeria in terms of customer base. And if it is not, we would have scrapped anything called women banking in Access Bank. So I can tell you for free that it is profitable. I hope that helps.
Thank you very much, Abiodun. And one thing keeps resounding is partnerships, collaboration. How you have also partnered with, how you've been partnering with DFIs to be able to make the non-financial services available to both the women themselves and also to your employees. That keeps, you know, coming up, the importance of partnerships. And everybody that is on the audience now can also hear Access Bank is available to partner with you. And also you mentioned You also mentioned the importance of debt financing. I think that question I'm going to ask Esther at the later round, but right now I will go straight to Nisha. I have one more question for you, Abiodun, I'm going straight to Nisha now.
Okay.
Nisha, hello. Access to finance is a major challenge in achieving women's economic empowerment, particularly in Africa. From your position at the Bill and Melinda Gates Foundation, where you have oversight over multiple women's economic and financial programs across the globe, what are the innovative approaches from other clients that could be adapted by financial service providers in Africa? Over to you, Felicia.
Thank you so much, Tolu. I really appreciate being part of this great panel. And you're hearing a lot about innovation right here in sub-Saharan Africa. But and I think we're inspired by models here in Africa, by models in Asia. But one of the most important things I think is what Abiodun was talking about, of how we can address risk and how we can build incentives to bring financial institutions closer to women and to open up the flow of capital to women. So one of the things that we're seeing and that we're very excited about is essentially the use of data, the increased flow of data, to give women more of a sense of identity, to allow financial institutions to be able to better manage risk. I think something that the foundation's talking about right now quite a bit internationally is something called digital public infrastructure. And so India is a great example of this. India is, with the India Stack, many of you might have heard about the digital tech that allows for ubiquitous payments to be done, bank accounts, but also data to be shared. The Gates Foundation's Women's Economic Empowerment Team supports women's self-help groups in India, where we have over 90 million women in self-help groups linked to commercial banks now, based on data and based on something that we think could be very interesting in many countries, which is priority sector lending. What the Indian government has told different financial institutions is, we're giving you the data, we're creating a digital highway, get in there and lend to women. And so, if a bank doesn't lend a certain percentage to women, there's a penalty, and they can pay it, or they can, go ahead and figure out ways to serve women. But I think what we see in countries that have these types of priority sector light lending mandates, we see financial institutions getting more serious about their products for women, and using data to and digital tools to reduce risk is really important. We think. We're also very excited about models of embedded finance in different kinds of platforms. So we're seeing more and more women as entrepreneurs in Africa, in Asia, selling on Facebook, selling on WhatsApp, selling on Instagram, selling on Telegram. One of the organizations that we support in Bangladesh is one Facebook group that has 1.4 million women in it. 1 million women are buyers, and 400,000 of them are entrepreneurs who sell inside of this trusted kind of women's bubble in this Facebook group. So there are, I think women as entrepreneurs are getting more and more savvy about using social media to connect to meet and to markets. In countries like India, it's even possible to use social media to connect to financial services. And so we're extremely excited about embedded finance and social media e-commerce, but also in supply chains. We're seeing a lot of women, and this is in Africa, we're very excited about women who are getting a better deal on finance in supply chains. So let's say a bank is banking a supplier of some type. We're seeing more banks in Asia and Africa linking directly to women entrepreneurs from the supplier, and then financing that inventory for women as entrepreneurs at a discounted rate. That gives you a woman data, that gives her a lower cost of the supplies themselves, and it gives them access to finance. So we're really excited about those embedded finance models. And they help build toward credit scoring, which is, is another side of the whole data coin. So yeah, I think those are some areas that we're really excited about. There's also one other model I'll just speak to really quickly of what we're seeing meso level, kind of like middleware, like Kaleidofin in India, where you have the banks with a lot of funding, and then you have a lot of microfinance institutions, women's groups, cooperatives, who are less sophisticated from a technological point of view, but reach millions and millions, hundreds of millions of women around the world. And what Kaleidofin does is it becomes the data sharing platform in between banks and DFIs that have the funding and the financial institutions on the ground who are really close to women, and opening up that channel, that data-driven channel, building trust between MFIs and SACCOs and women's cooperatives and institutions that would like to get money there, but can't afford to send their loan officers everywhere in the field. So yeah, I think we see a lot of interesting momentum around technology and data.
Thank you very much, Lisha. And it's really interesting to hear about what Gates Foundation has been doing around innovation, because lending to women takes efforts. It has to be intentional. It has to be innovative. It has to be timely. It has to be available. It has to be affordable. And it's really good to hear about the work that you're doing around embedded finance, and also how you are using informal suburb groups and connecting them to financial service providers. I believe that is very important. We cannot close our eyes to that informality of the sector and how women access informal services for their financial needs. I'm still going to come back. I have one more question for everyone, but I will quickly go to Caroline. Hi, Caroline.
Hello, Tolu.
So, Caroline, I'm going to draw on your work that you're doing in strengthening the Ugandan financial ecosystem. Caroline works at FSD Uganda, and you've seen the evolution of financial service providers in being resolute in financing women-owned businesses in Uganda. Is there new evidence that suggests an increase in the financing of diverse women's businesses in Uganda?
Thank you very much, Tolu. It's a great pleasure to share insights during the Financial Inclusion Week. I will really give reference to the World Economic Forum research series that was conducted between 2010 and 2015. And this series indicated that the number of women businesses had outpaced the number of men businesses in Uganda by about 1.5 times. And this is around the same time when the World Entrepreneur Summit announced Uganda as the most entrepreneurial country in the world. So during this time, women, there were about 40% of the businesses were owned by women. However, 86% of those businesses are actually micro businesses, which did not have any significance. There is no data about it. No one has really documented it. There is no record about them. And yet all the credit that was being given out was actually given to the men enterprises. 93% was given to the male enterprises. And what was the reason? It is because women don't have collateral. The bank products are really generic. They're either a savings account, a credit account, which women cannot afford. They do not have this. And there's no data, there is no cash flow. Even the small businesses they do, there's no one who is documenting to know their value in the market. However, over the years, there are so many opportunities that have emerged in Uganda that have actually brought to light the potential and the capacity of women. One of the key things that happened is the cash rounds. There was an introduction of cash round with women. Since they work mostly at home, they would collect together and start collecting their money. In that case, they were able to have a voice together and also combine their savings. And at the end of the day, at the end of the month, at the end of the week, they would have a significant amount, since they were like a group of 10 to 12 people. Around the same time, there was a real bloom on fintechs in Uganda. The fintechs came in with cheaper solutions. They were able to profile these women groups, capture data about them. We got to know the demographics of women and how much these women actually transact. So these fintechs came as an opportunity, and that was brought light to the financial service providers that, oh, actually, there is something about women that can be used in there. You remember around 2009, that is when mobile money was introduced in Uganda. And the women actually have benefited a lot from the introduction of mobile money, because this is the only way they have been reached. Most of their businesses are conducted in their homes. They can't leave home. So mobile money has actually helped them. The mobile money agents were able to support them to financial literacy and also give them a platform to save some money. So those are some of the, changes, developments that came in Uganda. There's been a lot of research. FSD Uganda has conducted a lot of research. The FinScope, 2014, 2016, 2018 has brought to light, some of the benefits and some of the reasons, business case for actually including women in. Development actors have continuously emphasized gender mainstreaming in their programming. So the financial institutions, as they look for funding from these development partners, they have to come to a middle ground. We need to see women actually included financially. So all their log frame indicators, their reporting, they want to see attraction on women. There's been changes in laws in Uganda, like the development, the amendment of the Financial Institutions Act, which introduced the agency banking. You realize that agency banking has also played a big role into including women into the space. So while all this is happening, the financial institutions have actually, slowly and gradually come to realize that there is a case for women, because there is now available data. There is now, a lot of information about women. So we've seen from where we sit at FSD Uganda, we've seen a lot of partnerships happening. Banks are partnering with MNOs so that they can develop products that are useful to women. Banks are partnering with fintechs. The fintechs have collected data, have profiled women, and the banks need this data to make financial decisions. So those are some of the things that have actually happened. And you realize that we have been able to see some changes in the access, in women's access to financial services. So there are new banks in Uganda. There are banks in Uganda that are actually serving women specifically 100%. We have the Finance Trust Bank that is actually serving women. We have ASA Microfinance. They serve 100% women, and specifically micro business women who are running micro enterprises. So that is a change that we have seen in the market, that there is a business case if a full bank can actually run those products. Almost 98% of banks in Uganda have products that are specific to women. Yeah, you'll find there's a full department that is serving women. There are 98% have products that are serving women. So that is a good change within this, the financial service providers. So
thank you. Thank you very much. Let me, please hold that thought. I want to go around. I want to go around for the second questions. And, Esther, I'm going to come back to you. We've had a lot of conversations. We are having a lot of conversation around the supply side, what they need to do, how they need to be convinced about the business case. But for a minute, we want to go back to the demand side of the equation now. We cannot close our eyes to the significant apathy of debt financing by women entrepreneurs. I know you've seen it, Abiodun, I know you've seen that also, where women entrepreneurs do not want to access debt financing. They're probably waiting for maybe subsidies or grants. I'm not speaking for the entirety of the women businesses or women entrepreneurs, but there's a significant apathy. What can we do about this apathy? Because there have been situations where women are presented with this product. These products are contextualized. It fits directly into their needs. But why is it that women are shying away from taking debt financing? What is happening? What can we do? Over to you, 2 minutes.
Okay, thanks, Tolu. So I think there are a couple of things, right? We've always said women were risk averse. I would say more women are risk aware. And so they have a tendency to want to make sure that whatever risk they take, they can fulfill whatever responsibilities they have to the fullest before they take that risk. And I think that's an advantage to the financial institutions in terms of the kind of market that women are, but also the kinds of opportunities that are there for them. And so in order, I think, to accelerate the uptake of, women and loans, this is where the opportunities that financial institutions like Access Banks and other are putting out there in terms of enhancing the financial literacy of women entrepreneurs, enabling them to understand what is the role of, debt in the growth of their business. Because at the end of the day, and it's so interesting, yesterday I was talking to women entrepreneurs who were saying, actually, when you look at male-owned businesses, they haven't grown on their own money. They've grown based on debt financing. So obviously there is an understanding there that I think is important to bring to women entrepreneurs. There's also a time and a place to take debt financing. So depending on where you are in your business, there's a very specific type of financing that is more appropriate for you and for where you want to go. But I think in order to entice women to be more engaged, the training and the knowledge that we're putting before them, and I would say financial institutions are the best place to do that because they're the ones who deal with the money. I think the better. Back to you, Tolu.
Thank you very much, Esther. I will race now to Abiodun. Abiodun, I'm coming back to you. Esther has dropped the responsibility at your door right now. There's so much to be done by financial institutions. And I want to know what Access Bank is doing differently. Yes, you've mentioned how you're being supported by DFIs, how you have all these resources to serve women businesses. But just like women are not a monolith, women businesses too are not a monolith. So there are SMEs. Those SMEs look very attractive to banks, but they are also MSMEs. But also that is not where we end it. We also have nano businesses, women businesses that are in deep rural areas, women businesses that are in hard to reach areas, women that are doing, daily stock. What are you doing to be able to reach, to be able to serve this market? For a minute, let's take our eyes away from SMEs and look at nano businesses, MSMEs. What is Access Bank doing differently to serve, not just in Nigeria, but across African markets? Over to you, just 2 minutes, because we have a lot of questions under the Q&A, and I really want us to address those questions. Thank you.
All right, Tolu. So thank you very much. And I will simply just say that, yes, Access Bank W is not just in Nigeria. We also have our footprint in about 14 African countries where we have geographical location. I would say that, so for us in Nigeria, we found out that financially excluded women are these women that we are talking about. And then we have a campaign that we call Project Dominance. The first thing is to get these women into the banking system. So first of all, they're not even in the formal system. They do businesses, but they are not within the formal system. So there is already a campaign, which is Project Dominance I'm referring to, where we are trying to target them, open account for them, and bring them into the financial sector. That's the first thing. And of course, to get them now fully banked, we are supporting them with what our agency banking, because yes, maybe brick and mortar cannot actually reach all these very locations, might not be profitable to the bank to be at every croonings of the areas where these women are. So we have what we call agency banking. And then we have closer agents who are then, amongst the women at the location where they are at the grassroots, who then can help them, save their money and be empowered to also take small loans. We have people we call better friends. This better friends is a better proposition on its own. It's targeted strictly at women. These better friends are like a mini bank on their own. They can help them to save account, they can open account for them, and they can be allowed to also give them, some small credits that can support their business at those locations. That's in Nigeria. In Kenya, we also have what we call microcredits. We targeted the tea farmers in Kenya, where that is targeted to them. In Ghana, we are giving them what we call Live Better Initiative, Live Better Initiative, I would say. Live Better Initiative is also targeted at women's specialized savings account for them that is linked to their mobile money wallets, because most of them don't have the regular accounts that can do a lot. It's always the tier 1 wallet account they have. So that product is tied to that money wallet account, helps them to save, and of course bundled with some insurance to ensure they are secured. Thank you.
Thank you very much. I'm practically in a race right now because we have 20 more minutes and we have lots of questions. But I'm going back to Lisha. Lisha, you've mentioned the work that Gates is doing in India, is doing in Kenya, is doing in Nigeria and other African countries. But we need scale, because that is what is really needed now. But what is the scale of all these innovations? We've heard about embedded finance, we've heard about meso. What is the scale, and how is Gates Foundation enabling this scale to happen? Over to you, 2 minutes, please.
Yeah, that is really the big question. As you pointed out earlier on, we cannot ignore women in groups. One of the things that we also cannot ignore is the digital divide. Digital innovation and data, they drive scale. They get us where we need to go. But one thing that we're extremely mindful of at the Gates Foundation is the digital divide, which is growing in some countries in sub-Saharan Africa. So what do we need to do? We need to bridge that data gap. We need to address women's issues of trust. We need to be driving the collection of safe and secure data. One of the things that was exciting for me this past month was going to Gates Grand Challenges in Senegal, where we looked at applications of artificial intelligence for development. And there were chatbots that were oriented toward women as entrepreneurs, where the woman could talk about her business. She could say, I bought tomatoes at X price, and then I had my transportation at X price, and then this is what I'm getting at market. And the chatbots were beginning to prepare basically a business plan for them, or cash flow statement for them, something that they could then take to a financial institution. So I think that one of the programs that we're really excited about in Nigeria is Nigeria for Women. And Tolu, I know you worked on this. This is a program that originally in its pilot went to 500,000 women using groups. And they're all saving together, they're lending together. And now banks like Access Bank and others are interested in plugging into that group. So we need to bridge the digital divide and build that digital literacy, which is what the Nigerian government is committed to do. I think with the World Bank, I think this commitment of government working in an effective way side by side with private sector is a way that we can help bring more women, low-income women who are entrepreneurs, into the banking sector. And then it's up to, as you said, it's about intentionality of the banks, getting them better products, getting them at the right price, addressing the fact that women are better at repaying and women are they're better repeat borrowers. They're good business for these financial institutions. So I think bridging that great gap between the MNOs, the banks, and the government, and letting data flow to advance women is going to be very important.
Thank you very much, Lisha. What you said, just in summary, is partnerships is very important. You know, we cannot afford to work in silos. It's not just Gates doing things independently, or MasterCard Foundation doing things independently, or FSDs doing things independently. We all have to come together to be able to create this enabling environment, to be able to design contextualized products that will reach all women segments, women entrepreneurs, irrespective of their sizes. And you've also mentioned how informality has to be plugged into formality, because there is a lot of women in the informal sector, and that intentionality in serving the women in the informal sector and then plugging them back to the formal sector. Thank you very much. Caroline, I have a question. We are colleagues, FSDs, right? So what is FSD Uganda doing in all of this? Are you facilitating all this great work that is happening in Uganda? 1.5 minutes, because we are just colleagues, so we have to move quickly to the question and answer. Over.
Thank you, Tolu. FSD continues to do their facilitation and convening role. We've maintained our target groups, target populations to women and micro and small enterprises. And that means all our programming has a gender lens, attached to it. So in that case, everything that we channel out really must have, women entrepreneurs targeted. FSD Uganda has done a lot of research that has been shared across the industry, and this research has supported the industry players and actors to actually develop new products and actually know how to target, women entrepreneurs better. We participate and we facilitate also the piloting of new products that have been developed by, financial institutions. And I have quite a number of examples, but I will just outline this right now. FSD has participated in policy and development of laws, the Financial Act, the financial inclusion, policies. FSD is at the forefront, working with the central bank and the government of Uganda to actually do that. The convening role has seen FSD craft a lot of partnerships and strengthening industry associations for them to actually support, the institutions much better, and also the women entrepreneurs.
Thank you very much, Caroline. We have more than a couple of questions there. So the first question will go to Esther, which this question is, when we say the business case needs to be made at all times, you didn't say that though, does this apply to men too, or is it only for women?
Thank you very much for the question. So this is, it's an interesting question in the sense that nobody asked the question as to, whether men are bankable or not, right? But we're asking whether women are bankable, and so you have to make the business case. And I think as we're making the business case, it's also important to show for the financial institutions that have been doing this and have been doing this in a profitable manner, to be able to feed into the proving of that business case. So it might not so much apply to men, because I think men have pretty much dominated the market. And so as we're trying to take financial institutions and other partners for that, because I think corporates also have a role to play, as we're leading them to invest more into the women's market, we need to show them where it is.
Thank you very much, Esther. Abiodun, you have so many questions there, so I'm just going to run through it. So I just want you to eat it like this, pam, pam, pam. Okay. So there's this misconception around bank and product servicing specific to women, and saying that they are not profitable. Can you give an example, a specific example of a product lending, a product a lending product offered to women that has been successful in providing business opportunities to women through access to finance in Nigeria? Another question for you, can you say in your experience that there is enough data to show business case for lending to women? A lot of times, lending to women has been pegged to groups. Is it really the optimal way of supporting women? Over to you. Just to
All right.
1.5
Thank
minutes,
you.
please.
Yeah, so first of all, the practical example I can give you is a product with us, which we call the W Power Loan. And the W Power Loan is a unique product designed specifically for women-owned, women-led, women-organized businesses, SMEs, that is available for them at a discounted interest rate, flexible collateral, and as well as available for working capital, asset acquisition, or business expansion, as the case may be. So that's the portfolio in itself is appraised from time to time. And from that portfolio, we can see. And just like I mentioned earlier on when I was presenting, I had said that we have support from DFI. So the funding comes from them. This is not the bank just taking its own funding, which comes a bit more expensive than what we get from DFIs to support that portfolio. So that is a strong business case. And NPL on that portfolio is about 2%. So the second question, talking about having enough data for a business case, I think that yes, that's not just even in Nigeria, even all over the world. I can see, different cases. I'm sure we have heard Caroline today speaking about what has happened, the transformation that has happened in Uganda. That's a strong business case. And of course, pegging a particular product for women is not, are you saying, is that the best way to serve women, if I get that right? So that we are able to identify them and put them in a portfolio where we can actually, manage them, engage with them directly. Today, if I I have webinars every month speaking to women, and if I put out application, I get several thousands of people applying. And of course, during the live session, I can see, sometimes when you start hearing, is this only for women? Can't men benefit from it? And I'm like, yes, you are allies in this thing. You can benefit from it. However, some of my products, most of my products are channeled specifically to women. And so it's not out of place because we just feel we want to bring them out of their shell. So that's why we are really focusing on them.
Thank you very much, Abiodun. There's a question for Lisha. How do you engage with government institutions who have mandates to oversee financial services and those that are responsible for women empowerment? More minutes.
We definitely believe that part of the role of the Bill and Melinda Gates Foundation is to support governments as they figure this out. Their responsibility is to create an enabling policy environment. We have worked with the Nigerian government to develop a women's economic empowerment policy. We're working with the Kenyan government on this right now, and definitely been working with India for quite some time. A lot of this is to make sure that the government is addressing specific barriers like land rights, collateral rights, women's access to their pensions, et cetera. I mean, there's some really important policy pieces, and the FSDs, I think, have been at the forefront of a lot of that great work across Africa. Good for you. But we also, I think, are looking to build a lot of capacity at the government level around what works, around meeting women where they are, best practices in working with women's groups. Just basic tenets that worked in Nigeria were helping the Nigerian government understand that women must form their own groups. It can't be formed by the government from the outside. It can't be disrupted by political factors and elections and things like that. The integrity of women's groups and the trust inside those groups is a huge part of the power. And I think that we try to work side by side to build capacity with government. It's always a challenge inside of government. There are never enough resources really to help enable government to do what it needs to do. So I think, policy, regulation, capacity, and finding the right role for government.
Thank you very much, Lisha. There's a comment, great discussion. Financial service providers should also consider segmenting women and the product in order to ensure that all characteristics are considered, and therefore increasing the possibility of making their products more beneficial to women. Thank you very much. It's very important. Women's segmentation. Women are not a monolith. Women's businesses are not a monolith. We need contextualized understanding. Even women that are in agribusiness, that are in agriculture, their businesses also, they are not a monolith. We have various value chains. So we need more knowledge. We need more data informing us about who these women are, where are they, what are the financial needs, and what are the best possible channels through which we can package these financial services to them. There's a question for Abiodun. And does Access Bank has a village banking proposition for the unbanked women in rural areas to lure them to, I don't know about luring them, luring them to be formalized?
Okay, I think I mentioned it when I was talking to some of the things that we do, and that's the project dominance, under which we have agency banking, closer agent, and better friends. Those people are actually in the rural. You won't see them in the Lagos, in the cosmopolitan state. You will see them in the core northern areas. And that's really where these women are. And that's where the opportunity is to invest these women are. Though we don't call it village banking, like you said, but then that's the target market, the people in the villages. And of course, we partner even up to state government because they know where these people are. So working with them, we go to those locations through those agents and get them out to open an account, incentivize it for them in somewhat way, and take it on from there.
Thank you very much, Abiodun. I know that there's still more to be done because we've still not reached all the women. So I'm an advocate of doing more, let's do more. And that is the responsibility on her hands to ensure that we are doing more, we understand the women better, the women segments better, and we are able to meet them at where they are, and then being able to provide them the necessary support. But we have 5 more minutes, and within this 5 more, within this minute, I want each of our panelists to give us one call to action, just one. I'm going to start with Esther. From Esther to Lisha to Abiodun, and then Caroline.
I mean, I think we've said it, right? Women are a viable market, they're a viable segment. Financial institutions have a role to play. Intentionality is important, and women are not a homogeneous group. From small women to micro, to older women, to younger women. They each have very different characteristics that need to be taken into account as we're developing for them. And maybe one more to the women out there, I think it's important to take that leap, right? Financial institutions are coming to the table. Women also need to come to the table so that the conversation can happen.
Thank you very much. Over to you, Lisha.
I love that, Esther. I guess an additional call to action for me would be that financial institutions reach out for partnership. You know, you can't assume that the only thing a woman needs to run her business is a bank account. You know, they need financial literacy. They need, you know, they need business networks. This is not something that banks or financial institutions have to build, but they can partner. And I think that there are some win-win situations there, you know, to open up those doors and allow some strategic partnerships that can attract women, build trust, build capacity, build data, and build up the business case for reaching women.
Thank you very much, Lisha. We have 2 more minutes, so please, Lisha, Abiodun, just 10 seconds.
Exactly. Thank you. So I was at a session yesterday and I heard some very revealing statistics. Like 48% of the GDP in the world is contributed by SMEs. And I'm like, wow. And of that, of total SME, women are above 50%. So it just makes sense to bank women. And please, let's take the step forward.
Thank you very much. Caroline, 10 seconds, please.
Yeah, thank you. For me, it's not enough to develop products, general products for women. We have to have a deep dive into the women segments, into the women, deeper into demographics to understand what kind of woman is it. Is it a rural woman? Is it an urban woman? Is it a woman who works in the market? That is the only way we can be able to reach every woman from wherever they are. Thank you.
Thank you very much. And thank you to our audience who are they've been with us for the past 60 minutes. And thank you very much to my panelists. They've done great justice. And I want us to please partner. I want us to collaborate. So please, all the panelists are on LinkedIn, reach out to them on LinkedIn. And please, let's take these conversations forward. Let's do more for the women businesses in Africa. Let's ensure that money is put into the hands of women businesses and they are able to scale to greater productivity and income. Thank you, everyone. And thank you very much, Center for Financial Inclusion. Until next year, bye.